Raju.
I'm Sayed.
And I'm Amir.
And we are Enigma Consulting.
So for our agenda today, we'll be starting off our presentation with our main organizational problem. After that, we'll be following up and supporting our alternatives with the qualitative and the quantitative analyses. Next, we'll be presenting our 3 alternatives that we think best fits the company. After that, we will be talking about our decision and what steps are required to implement that decision. Finally, we'll be ending off our presentation with your questions. So for the organizational problem, the main problem that the company is currently the main 2 problems that the company is currently facing are the facts that the oil prices in the region of Alberta have been declining, showing that the market is currently unstable, and that the shares of the company are being sold at prices lower than that of the market price, showing that the company is kind of undervalued. And that leads to the company rethinking whether they should continue to operate, restructure their business, or completely dismantle it.
So some of the strengths that Spruceland Property possesses is that they do have a very positive impact in the community, both socially and economically as well. So if whatever decision that Spruceland decided to make, it would be received well by the community, as it has in the past. Also, it's been a business since 1969, which is pretty impressive to be in business for that long and have profits for as long as they have been. Also, 75% of the shareholders are local, which we believe is really positive because it is a social enterprise and it has a good impact on the community. A few of the weaknesses that Spruceland has is that there is a large gap between the asset and the market value. And the shares of the company are not very liquid, meaning it's very hard to sell. And for the growth that it has received, it hasn't really been structured for that type of growth.
So low interest rates and capitalization rates is a great opportunity for Spruceland Properties to continue the profitable business. Appraisals going up is also another opportunity that they can use to dissolve the business because they will be able to sell the properties at a higher price than what they bought it for. There are a couple of threats that Spruceland Properties are a part of. The biggest threat is poor economic conditions. As you know, the Albertan economy runs entirely on oil prices, and when the oil prices goes down, the economy is not stable enough, and this could cause Spruceland Properties to have less profits than they had before. Unhappy shareholders is another threat. In the event of dismantling, the shareholders might not be happy because of the social enterprise. They might feel left out and not part of a community. So this is a graph of the Western Texas Intermediate oil prices. As you can see, from 2014 to 2015, the oil prices fell from $100 per barrel to $50 per barrel. That is about 50% of the price. This poses a great threat for the company, and the trend of the graph shows that the oil prices have been unstable throughout the years. They keep on rising and lowering, which makes the economy really unstable. So this graph shows the share values and the dividends of Spruceland Properties. The dotted line shows the actual market value of the shares and what they're worth, and the circle shows what the shareholders are trading the shares at. There is a 50% difference between these 2 prices, which is a bad sign for the company because the shareholders are getting less than what the market value of the shares is.
For the gap analysis, I'll be talking about where the company currently is at and where they want to be in the future, and also how they will be getting there in the future. As to where the company currently is, with the economic slowdown, and as Nabil previously mentioned, the shares and oil prices being traded at prices lower than that of the market value, again, they're considering whether they should continue to operate, restructure, or completely dismantle. As to where they want to be in the future, Spruceland Properties is a social enterprise, and as Raju mentioned, 75% of the shareholders are all locally based. So that means that not only are they looking to be profitable, but they also want to have happy shareholders. So they want to implement a decision that leaves the slave land community appreciative and respectful towards the company in the future. And as to how they will be getting there, that's what we'll be discussing in the future slides. So for the alternatives, the first alternative is to continue operations. This obviously has both advantages and disadvantages. Starting off with the advantages, it's that as provided to us by the financial statements of Spruceland Properties, we can see that there was an increase in the numbers of their assets and those of their general cash flow. which means that the company was profitable when compared to their previous year. As for their disadvantages, because, as Nabil said, the market is currently unstable, that could potentially mean that the company will not be as profitable as they were in the previous years in the future.
As for the second alternative, that is to restructure the company. There are two ways that you can do that. The first way is to make the company entirely public so that the shares can be traded at the exchange market. So the shareholders will be getting the correct market value of the shares. The second step to restructuring it is transferring the company from the Albertan region to any other region so that the economic conditions are not unstable because of the oil prices. This also has its disadvantages that it will cost a lot of money, and the profits won't be short term. The profits will start coming in after about 15 to 20 years. That can pose a problem to the company.
And the third alternative that we could go with is to completely dissolve the company. So the decision that we did take is to dismantle the company. As Nabil mentioned before, the Northern Alberta economy is not diversified enough, meaning it is very subject to boom and bust cycles, which creates a very large risk to continue the operations of the business, because we don't know if oil is down, whether the company will be extremely profitable or not. And we do see more trends in society going towards greener and more renewable technology, and policy has been going towards that direction as well, creating more incentives. In the last 5-10 years, we've been seeing more advancement in renewable technology such as solar, wind, geothermal, battery technologies as well. And our firm believes that the shift will be going towards more green energy. And because there's a lack of diversification in Alberta's economy, and especially the Slave Lake area, which is very heavily dependent on the success of oil. So we believe we should get out right now and try and dismantle over the course of the future.
So for the implementation process, we just suggest that it goes over a course of 3 years. There are 5 different steps here. The first is to enlighten the shareholders. This is one of the most important steps because you want to make sure the shareholders know what's going to be the future of the company so that they can make the decisions accordingly. The second step is to do a gradual dismantling. We don't want to sell all of our properties right away because, as I showed in the oil graphs, the forecast is that the oil prices will rise a little bit. So what we want is to keep tabs on it, and when the prices are right and we're getting a profit, we need to sell our properties at that time. The fourth is to get approval from Alberta Securities Commissions to unregister us as a reporting issuer. And the last step will be to distribute cash per common share. We do that in the final stages of the implementation process, specifically in the 3rd year, so that we are getting all of our money from selling our properties and we can pay dividends and the shares that the shareholder owns.
So just to recap what we've done, we've started at a state where the board members were uncertain of whether we should continue the operations to restructure or dismantle. What we've done is we've dismantled the company gradually because of the economic slowdown that is happening. And where we've gotten to is that the company has been successfully dismantled. We've sold our assets at a high value, and we've made sure that our shareholders get the highest possible payout.
So that is all we have for you guys today. Thank you for listening to our presentation. If you guys have any questions, please go ahead.
You mentioned, rightly so, that the falling oil prices and the impact that had on the general economy. How did that impact the company?
So because the Slave Lake region is very dependent on the success of oil, because it drives so much money towards that region, and Northern Alberta in general, we believe that if the oil economy goes down, that the Spruceland Properties company will go down with it, because there is such a strong correlation between oil and the Northern Alberta market.
Right. But so how does it impact the company directly, though? I guess the answer I'm looking for is if those oil and gas businesses are not successful and profitable and growing, they can't rent space in the company's properties, and as a result, revenue will go down, and revenue goes down, the value of the assets will go down as well.
Well,
Another thing was that they were mainly dependent on investors. Well, they were looking for investments coming from out of the northern Alberta region and Alberta in general. So when obviously if I'm an investor and I want to look into Alberta and I realize that, oh, Alberta is mainly depending on the oil prices, and I see that the market of the oil isn't currently doing well and it's unstable, so I would rather not move to Alberta, and therefore it would kind of be a disadvantage for Spruce Land Properties as to why I'm not investing in Alberta, and then they won't be able to rent out their properties.
One thing that didn't come up in the presentation, the company had received an offer to sell its assets. Address whether it should accept the offer or.
As I mentioned in the oil prices forecasting, the forecast is that the oil prices will go up a certain amount. Even though that is not certain, we don't want to sell all of our assets right away. So we want it to be gradual, so that in the future when the prices are right and we're gaining a profit, we want to sell our assets at that time.
So if we're going to sell our assets, as you're suggesting, over a period of time, do you have any plans for what we're going to do with that excess cash? Because your timeline made it sound like it's going to be a 3-year period between dismantling and paying out our shareholders. So what's your plan for the cash injection in that 3-year time period?
So we'd like to just inject it back into the slave-led community because they've helped us grow the business. So we just want to put it back into the community.
Like back into the community in what way?
Just back to the shareholders.
So we're not going to wait until the end of the 3 years to?
No, we're going to do that at the end of the 3 years. Yeah. So we'll hold on to the cash, and then at the end of the 3 years, we'll give it back.
No questions for me, so you do have more.
So the one, you did mention, sorry, refresh my memory, you did mention the fact that the company was not listed on an exchange.
Yes.
And so that had what impact on its share?
The shares were trading at about 50% less than their market value because the shareholders were trading them privately instead of on the exchange.
Is that, so the reason the shares were trading at a low value was because the company wasn't listed?
Yes.
Would an option be for it to get a listing then? And that solve the problem?
Yeah, that was part of the restructuring plan to get them publicly listed so that they can trade their shares on the exchange market so that the shareholders get the right value of the shares.
Judges, we will take one final question at this time, if you have any.
So you just said that that was part of your restructuring alternative, but you didn't choose that, you chose the dissolution. So can you just, I guess, clarify for us why you thought dissolving was a better alternative than a restructure?
Dissolving was a better alternative because in the restructuring plan, our restructuring plan depended on the economy, as we have already stated that the economy is really unstable, and in the future when you're not certain what's going to happen and the trends show that the oil prices can go down significantly, that would have a negative impact on the company. And continuing the process was also an option, but that was again, that also depends a lot on the economy. If the economy keeps on going down, it's unstable, we are not certain of what's going to happen in the future, that also has a negative impact on the company. That's why we chose the dismantling process.
Perfect. Thanks, guys. We're going to let the judges look over their cards here a little bit, so if you want to exit the room, and then I'll come back and grab you guys when we're ready to go, all right? And then audience at this time, if you guys want to leave, you're able to do so as well.